I'm not sure who's going first. These guys don't seem to know who either, so we'll start the slideshow and then that person will start. But I'm going to introduce them real quick. Peter Harrington from Malone. Been doing the retail sector for quite some time. And Matt Arrants has presented with us a couple times as well. He'll be handling the hospitality sector, which if you've been in Portland at all, you can see all the hotels going up. So without further ado, one of you gentlemen will take it from here.
Is this working?
It is. I'm going to hold on.
Hi, am I going first? I guess I am. So I'm honored to be on the stage.
You got the clicker?
Well, you get the clicker. I'm honored to be on the stage with Matt today.
You're up first.
Huh? Oh, you're up first? I'm off.
All right, thanks,
Oh,
everybody.
I am.
See you later. We'll be here all week.
So thank you, MEREDA, for having me back. Craig, Young, Shelley, for all you do. I said, I don't know if they all filled out their evaluation forms last year, because I don't know why I'm invited back year after year. But anyways, it's great to be here. I appreciate all that MEREDA does, you know, all the volunteers. I mean, you know, real estate in Maine is 18% of Maine's gross domestic product. So it's, the numbers we have are from 2022, but it's about $15.7 billion. And it's an industry that needs to be nurtured, needs to be looked after in Augusta. We have to all work together to do sustainable development. And I've done this myself through the Maine Association of Realtors. I've been on their legislative committee. Again, I never say no for about 14 years now. So I'm truly passionate about our industry. I'm truly passionate about what we do for our state, how we listened to Kevin Bunker earlier with the housing development. What we do is vital to our state, probably more so than some others. So without further ado, I'm going to talk about, about retail real estate. So as we enter 2024, 2023 was another astounding year for retail sector of commercial real estate. Really amazing that, you know, with high inflation, high interest rates, chaos in the world, everything going on. Everyone thought we'd be in a recession by now. And here we are with one of the best economies in the world. Retail sales up over 5.2% over last December. And it's just amazing to me how it just continues to move forward. You know, everyone thought that retail would be dead with the age of Amazon and online shopping, and it just didn't happen. You know, it's, of course, the consumer is the key there. And, you know, jobs growth has been spectacular. I think January, 336,000 jobs, upward revision of December and November. You know, wage growth, you know, astounding, really, based on how long this has gone. So now, I'm going to do a little differently this year. I'm going to talk about each individual town in our report. You know, we survey the greater Portland area, and we mostly do bigger centers, you know, things where we can get a good handle on where vacancy is. It's impossible for us to go out and take a look at every retail space in downtown Portland, Westbrook, Main Street. You know, the Main Street stuff, we just can't simply catalog all that and track it. But at the end of 2023, the vacancy rate in Portland was 3.9%. You know, and the range for triple net range here sounds crazy, but it is, on a triple net basis, they're from 8 to 40. That's what I found. And $25 to $35 a square foot on a modified gross basis. You know, again, healthy. And, you know, I think you'll see later that our vacancy rate has been healthy for the last 10 years. So, Old Port update. I got to get this one correct because I do a lot of work in the Old Port. So the Old Port continues to be ultra low vacancy rate. Tourists, locals flooding to the area. You know, there's new apartments that are coming online. The 18-story tower, which should add vitality to the area a little more nights, weekends, especially in off-season. You know, I think it's a great place to live and work. You know, it's amazing to me that I probably would put the vacancy rate at around 2% in the Old Port. You know, there's a couple spaces on Middle Street, there's one or two on 4th Street, one on Commercial Street that two people are vying for in this beautiful granite-faced building. and very, very low vacancy rate. A couple things of note that are happening here up in the upper right. East Brown Cow is converting one Canal Plaza, it used to be Key Bank's retail office space, 2 levels into modern retail, hoping to continue to enliven that area. Nosh Taco took over that building. It's actually on the left, but it's that building recently that was Copper Branch, that sort of struggled to get off the ground. I think in the spring you'll see outdoor seating there, it's spectacular. Hopefully we'll get some retail traction there. If anyone's looking for retail space, we have retail space there. East Brown Cow is also doing 2 historic rehabs. One of them is on the corner of Middle and Lower Exchange Street. Everyone knows it as the former Starbucks location. Stunning historic rehab that when the wraps come off it, there's going to be nothing like it in our market. And I would dare say nothing like it in most markets. I mean, the corner is going to be rough and tumble. It's going to be floor to ceiling, low iron glass. It's going to be one of the most stunning retail spaces probably anywhere. The other building, the other 2 tenants, Bangor Savings is staying, and we have Faribault Mill, which is a mill company from Faribault, Minnesota. They bought Graham's Mount, so they connected a local blanket wool products company with Faribault Mill. That should be done and open, hopefully, the first floor by this summer. Further down, 121 Middle Street, one of my favorite buildings ever, beautiful. That building is it's under wraps right now. They're going to pull the wrap off at some point. But that building is undergoing a historic rehab as well. And this is a 2024 deal, but it took 2 years to do it. But on the left side, we signed Free People. They're opening their first store in Maine, but it's the same company as Urban Outfitters and Anthropology. So, and then a lot of people say to me, Pete, that's big nationals. Is that what's going to the soul of the old port? No. These bigger spaces, the right retailers, you need them. The Madewell is another example. They opened last year. People come to Madewell, they put their kids in the basement at the comic book store, the lower level, I should say, and then they go to Madewell. So the locals benefit from the bigger nationals. We've struggled having locals fill bigger spaces. But the heart and soul of the old port continues to be small, local, authentic retail, food, Blythe and Burroughs, bars, restaurants. It's really what the bread and butter of it is. Without that character, you become like Harvard Square, and what's the sense of going on? Anyways, the bottom left, Granite Building, I used to love Harvard Square back in the 80s. Anyways, the lower left here, Granite Face Building, another building undergoing a rehab, another one of my favorite properties. That's not just because he's a friend and client of mine, but that's one of the only spaces on Commercial Street currently, and there's 2 people sort of pushing for it. It's amazing what's happened to the old port, and I don't see it slowing down. Okay, next, we're going to go to Scarborough. Amazingly, Scarborough's vacancy rate's 0.9%. I had a tenant tell me that I'm not going to take your space, be able to go get another one. I told them, well, that's good because there isn't another one. And, but again, the range 16 to 30 a foot, triple net. Maine's first Costco, which I haven't been there yet because it's very busy, and every time I try to drive by there, but everyone tells me they're the best of breed in the shopping club world, and I believe people. I'm pretty gullible, so maybe it is. But they're also the Downs project. On the left is they're trying to build a town center in there with ball fields and other, Allagash Brewery. A lot happening in there, sort of a live industrial space, Costco at the end, not too far from the Turnpike. Again, I see positives for Scarborough. It's a town that's open for business, which is not true of all towns in Maine. Okay, next, South Portland. So the mall area, I'm here to tell you, is not dead. The main mall is, thanks to Taryn Beaulieu, told me that their sales are back to pre-pandemic levels. And a lot of people don't go to the main mall a lot, but they have Lululemon, they have Apple, Pottery Barn. They have some major draws still there. So the main mall's not dead. 5.1% vacancy rate. The majority of that is in the former Sears. So if you take out that big Sears space, really very low vacancy rate. You get some new tenants in the mall. I don't even know all of them. I went in there about a month ago. There was some tenants I'd never even heard of. So last time you were there, unless your phone broke, half of you probably don't go to the main mall, but it's definitely worth going to. Oh, by the way, if I was born today, I would be 15 instead of 60 for the 29th. Okay, so that's the deal in South Portland. Again, the Jetport Plaza is still in flux, but it's a good chance it'll become sort of medical office. Again, to go and replace and build something like this and get a big parking field like this in Westbrook, the medical office building, they had to build a garage for it. So, to have a big open site like this, I think that's another reason why vacancy rates are low, is people are taking some of these former retail buildings and converting them into other uses. Okay, Westbrook is one of my favorites. I live off Brighton Avenue. I call it Demoulas, but you call it Market Basket. I went to college in Lowell, Mass, and I used to shop at the Original. That store is the busiest supermarket, in Maine. And out front, they have a Chick-fil-A. They have REI. I've heard rumor that REI actually would like to have more space. And then they opened Cowbell this year. They're out back to building a medical office building, and they hit a couple of hiccups. But I think right now there's a little bit of a hold on some of the development. A big part of that is the cost to build and interest rates, and people willing to take risk in this market. But I do think that long term, it's in between 2 exits off the turnpike, and it's on a big feeder road into Portland. We go out to Sebago Lake a lot. That's the way we go. That's one of the major roads, believe it or not, going west and out to Gorham and other areas. So I see great upside here, and if you haven't been to the Market Basket, I'll see you there Saturday. I go with my wife, and I just wander around, and then she calls me when it's time to leave. I'm very helpful in the store. I live in an assisted living facility. My wife is actually, and she's the best, my caregiver. So Falmouth. Route 1 in Falmouth, again, extremely low vacancy rate. Steve Bauman, Jonathan Cohen have done some development out here. This is one of the only places I've seen 2% vacancy. One of the only places I've seen new retail coming online in the Wyeth condo building. About 20,980 square feet of new new retail / service space. And I talked to Steve, he said about half of it is committed. So again, I think you have a little bit more of a captive audience up there, Yarmouth, Cumberland, they don't want to come back into Portland sometimes. So again, I think a thriving area. It services several northern towns, and I think it will be fine. It's the new the Tuscan restaurant opened up out there too. Is it Tuscan? Which one's that called? Tuscan Bistro. I heard it's very good. I've been there once, and JP's, so there's some good food out there too. All right, 10-year vacancy rate. I didn't do a bunch of graphs and charts this year, but I was looking at this. I'm like, really, it's never really been that bad. We've been lucky to be ahead of the nation for years in our low vacancy rate. But now I think the nation is sort of caught up to us. I think if you read what's happening nationwide, again, with the lack of new retail space, and the fact that people are back out shopping, retail vacancy rates are down. I can't emphasize this enough. It's one of the more positive aspects of commercial real estate is retail. Look at that, a tiny bit up. That's my fault. I should have leased something else. So what's driving it? Again, post-pandemic forces are still at work. People are out again. They had pent-up demand. They have nothing else to do either, most of them. So they like to go out, they like to go to eat, they like to go shopping, and I don't, but they do, whoever they are, the consumers. Portland is still a top destination for tourists and locals. Strong economy, job growth continues, solid wage growth. Inflation is easing, but you know what? If you're young and you're renting an apartment and you go in the grocery store, those are the 2 areas where it's still sticking, and you feel that pain. I'm still using Heinz ketchup, but a lot of people have switched to other products, and that's no joke. People have had to do this. There's a struggle out there for paying for things. Retail sales were up, as I mentioned, 5.6%, anywhere from 4 to 5. Our economy grew at one of the highest levels in the world. Everyone thought we were in big trouble. And then a lack of new retail construction, as I mentioned. And that should help keep vacancies low. I mean, nobody's building any new retail space. And then the future of retail. Well, we're going to keep shopping. We are not Americans. We are consumers, if you check with the government. And 3/4 of our economy is consumer spending. So we begin 2024 on solid footing. New construction will be impacted again by higher rates and higher costs and lack of risk-taking by people and reluctance by some banks to lend. Not any banks that are here today. Rental rates will moderate in areas that have seen the biggest run-up. I think, as I mentioned, the Old Port, we had $75 a square foot for a space modified gross. That's a new high. I don't know how much upside there is. Sorry, some people, but maybe there is. And then credit card debt default, mentioned by TD's economists. People are using credit cards more. You know, the home sales things, 30-year low. I was president of Maine Association of Realtors. Last year I was president of Maine Listings. There's 3,150 homes for sale in Maine. That includes trailers, mobile homes, shacks on some river somewhere, under contract, continue to show. If anyone's trying to buy a house, it's brutal. It's up to us to try to increase the supply because there's a crisis at all levels of residential real estate. I don't see any downside to investing in residential real estate. But with this low thing, every time a house sells, huge impact in the economy. I had a sheetrock guy that came to my house. I said, thanks for coming. He's like, thanks for having me. It's slowing. So I think with rates and equity lines the way they are, it will really start to affect certain retail sales, like furniture, carpets, lighting. You know, that's really, I think, a part, like Home Depot and Lowe's both said big ticket items way off this last quarter. So I think that's a negative. And when people feel wealth in their home, they feel like they can go shop. They can, I just feel like I can always go do anything regardless of anything. But people feel better when they have great equity and their rates are low and they have a good equity line and they feel comfortable. And I think that's going to start to affect us. It's going to affect some retailers. And again, I think that could be one of the risks to our retail market this year. But having said all that, I still think 2024, the way we're rolling so far, will be another positive year for retail real estate. It's just no way around it. So, and I don't think that will slow, except for unless something happens to the consumer and they have negative sentiment all of a sudden, or geopolitical, and the world's been a mess anyways. We already had Donald Trump as a president, so I mean, we've all these things we've seen before. So whatever happens, I still think that we'll all be successful if you're in retail real estate, and I'm confident there'll be another great year. Thanks again. I want to thank Carly, Molly, Michelle, everyone at my office for help on this. Again, it's a lot of work for all these people that present here, and it's a little stressful. Feeling fucking stressed. If I seem stressed, I'm stressed. I'm up to it. And I just want to introduce Matt. He's going to give the. You want? No, you can't have the clicker.
Thanks, everybody.
Do I stay up here?
Thank you. I'm going to stand. I just had one of those moments. If you've spoken before, you'll know what I'm talking about. As he mentioned, you can get a little anxious as you're getting ready to present. And I was already thinking that one of my themes was going to be, this is a really boring presentation I'm about to give you. And as I watched his, I realized I forgot pictures. He had all these beautiful pictures. This is the extent of my pictures right here. So those of you that want to leave, I won't take it personally. This is going to be hopefully quick and painless, but frankly, a little boring. Hospitality right now is boring, which is great, right? I mean, 2019 was a record year. 2020, we have COVID, right? COVID is a prognosticator's dream. Well, when do you think RevPAR is going to get back to 2019 levels, right? And we spent years talking about that. And then 2021, everybody's like, wow, things are pretty good. And then 22 was bonkers, right? And so I presented last year, and I was looking at 22 data, and the numbers were phenomenal. Like 30% increases in revenues per available room. Just absolutely bonkers. So this year, things aren't that exciting, which is really good news, right? We did not see, the market did not tank last year in the way that some people really thought it would. And I'll get into that in a minute. But so now things are steady Eddie and frankly kind of boring. But I'm going to try and keep it entertaining. There's a line I use in all of my speeches, it seems, or presentations, and it goes, there are 3 types of lies. Lies, damn lies, and statistics. I'm gonna cover all 3 right now. You're gonna get all 3 in this presentation. So it's a real value opportunity. I'm gonna start with statistics. Don't forget your joke. Oh, that hurts. All right. So they said, and Pete was great about this because they had told us, don't do a lot of statistics. They don't want to see statistics. They don't want to see numbers. They don't want to see stuff going back, right? Nobody cares about the past. Everybody cares about the future. So I thought I'd start with this really fascinating graph, which is really, to me, this is fascinating. I got this from Mark Dugas. This whole presentation, by the way, I don't really do anything. I know that Peter probably has an army of people doing his. I put it together, but I basically just call people smarter than me and ask them what they think and then put it in a deck. So this is, and there's no numbers on it because I didn't want to complicate things. And frankly, I ran out of time, which is a story I'll tell later. But this is really a fascinating graph because of this huge, I mean, this is a phenomenal jump and growth, right? This is hotel revenues in downtown Portland, just on the peninsula, right? Went from something like 10 million to $150 million in 2022. And you can see what's really fascinating to me are those early spikes in revenue there that you can see. Those of you that can see me can see, right? So this is like 2010-ish, right? And so what happened in 2010 and 2011, 2012 is when we had the Hampton Inn open, we had the Courtyard open, the Hyatt Place opened, and the Autograph all opened in that era. And I think that might have been, other than last year, it might have been the last time I spoke to you, because I think I spoke to you all and I said, we're looking at a 60% increase in supply. There is no way this market can handle it. Occupancy is going to tank. It's just a statistical fact. You're welcome, right? So, of course, occupancy went from something like 68%, 67% to 75% with a 60% increase in supply. It just did not make sense. The fact of the matter is we had what some in the industry refer to as not an overbuilt market, but an under-demolished market, right? We added new product that people wanted, and people came. And we gave them a reason to come, right? I mean, obviously, the whole food and beverage situation and all of that contributed to that. But it was a matter of, frankly, and we joke, people that do what I do joke about, like, yeah, build it and they will come. Yeah, right? Because we've seen that go wrong a lot of times, but the fact is, it happened. And then you can just see, again, the huge dip in 20 with COVID, and then just that phenomenal, look at that rate of growth from there is just bonkers to me. And look, we know, you've probably already heard the reasons, right? One of the reasons Maine did so well was because people weren't flying, they weren't going to Europe, et cetera, et cetera. They wanted a leisure destination. So anyway, those are the factors behind it. These are just some of the interesting numbers. And again, I had to throw in a compound annual growth rate just so that I would sound smart. That's what CAGR stands for, is compound annual growth rate. Which is basically on average. So between 2012 and 2022, total revenues grew at 13% a year. That's just phenomenal rate of growth. And I would argue that it would put us in the top, 5 or 10% of major urban markets in the US. But we're not even in the top 60 in terms of lodging markets, so they don't really categorize us or compare us to other markets. So anyway, just some interesting statistics there about the growth over the 10 years. I was really struck by this August thing, right? Because this is something we can all relate to, right? You could get a room in August for $197 in 2012. It was $350 in 22, right? And you've all heard the story, right? Like $750 on Parents' Weekend or $1,000. And it's phenomenal. And one of the things that's interesting too, so let me just see, I don't know if I'm gonna be able to go back. Oh boy, I blew it. All right, I'm gonna save that story for later. We covered the statistics. Now we're moving on, we're into lies now. So here's what happens when you're trying to, one of the things that people are most interested in when I give presentations like this is new supply. Everybody wants to know what's gonna be built, what's happening, and every developer you talk to is like, oh yeah, I got it, we're building it, it's gonna open, and then it's actually under construction. We'll get to like well, we're building it, it's gonna happen. That list is next. That's in the damn lies category. The lies is it's going to open at X date, right? Because that never happens. It always gets delayed. I just went, and the Longfellow has already, I think won awards from Travel and Leisure, and it hasn't opened yet. That's going to be a great addition to the city, and whoever's behind it is a genius at PR, certainly. They're scheduled to open. They had been saying first quarter 2024. I think it's April. I went online yesterday, and it's April or May right now is what when you can book rooms for. Docent's Collection, that's actually a renovation of some rooms and then an addition of a whole bunch of other rooms that'll come online in this summer and then also at the end of the year. So that one will happen. That's not a lie. Okay, now we get to the damn lies, right? So this is what I was talking about developers are always telling me, I'll call developers, say, hey, what do you think, what's happening? Oh, we're open, it's a done deal. We just need like one more little thing, won't be a problem, it'll happen. Right now, I really don't believe anybody when they tell me anything because it's impossible to build. And I'll touch on that in a minute. But I won't go through this whole list because, frankly, I would say, I don't know, probably at least 10 or 20% of these will never get built, right? They're talked about, and some of these I know about. Some of them I pulled from a list. There are different lists that you can buy of proposed new supply, and they go through things. In fact, and there are some really interesting ones here. In fact, I'm dying to know. I will give $5 if anyone can tell me where the site is for the Live Away Suites. Just raise your hand if you know where the Live Away Suites is being built. Yeah, nobody, right? It was in a magazine somewhere. They sent out a press release that they're building one in like Oklahoma and somewhere else in the Midwest, and Portland, Maine is on their list. They're definitely going to open in Portland, so get ready. So anyway, some of these will get built, some of them won't. It's a tough environment right now for new development, for hotels for a number of reasons, despite the strong performance. So I was told to look at markets outside of Portland. So I want to, and I like to compare, and we're back to the statistics. So here you can see, this is trailing 12 through November. I mean, this is basically 2023 performance. And what's most important to me is the variance, right? The change in occupancy, change in average daily rate, and change in RevPAR. And I mentioned earlier, these markets were up, like Mid-Coast was up something like 30% last year in revenues per available room. So you would have expected that they would have dropped. And this was a big worry, particularly for, well, Mid-Coast within this set, but it was a concern also for Southern Maine, right? And then, and in particular, more in the luxury market, right? Because the talk last year was, everybody's going to Europe, and everyone did go to Europe. It was a zoo. And so everyone's going to Europe, so they're not going to Maine. So get ready, things are gonna be off. And they really weren't. I mean, these are pretty minor declines, and to me, it's great news. So I know this is boring that nothing's happening, but it's kind of good because, frankly, I expected a decline, a more significant decline last year, and we didn't see it. So you've got Mid-Coast is down a little in occupancy. Main, North, and Bangor, one of the problems and one of the reasons that I don't really have a lot of great statistics is because there isn't a lot of great data out there. You know, our lodging supply is pretty limited, and it's mostly mom and pops when you leave, you know, the major urban areas. So they don't contribute, or it's seasonal, so they don't contribute to Smith Travel Research, which is the kind of the go-to, or STR rather, which is the go-to resource for numbers. So back to lies. Actually, this would be a good time to tell you about why. So theoretically, this slide probably would have been better with the other one when I was talking about new development in Portland. And these are out of order. And the reason they're out of order, and I started to tell Pete this earlier, the reason that these aren't really in great order, and this is not, and there aren't pretty pictures. So we were having our meeting back in like December with the three of us. We did like a Zoom or something, and Pete says, yes, at the end of the call, or sometime during the call, he goes, yeah, so look, Shelley tells you need to have your deck in on like, whatever it is, February 10th. You're fine, you got a week, right? Like, don't worry about it. You're fine, just the 17th is fine. So on February, so that's, the 10th is a Monday. On Friday, I get an email, hey, just a friendly reminder, presentations are due on Monday. I'm like, yeah, whatever, Pete said, don't worry about it. Monday morning, I get another email, hey, just a reminder, presentations are due today, looking forward to seeing them, thanks. And then that afternoon, hey, presenters, still looking for some presentations from you all. The next morning, Matt, it's Shelley. Don't make me come to your house. She did. So that's my excuse for why I don't have pretty pictures, and these aren't all in order. Anyway, these are notable, a couple of notable projects outside of the greater Portland area. Hotel Ursa at UMaine Orono is opening Q1 2024. It's notable because it's a college and university hotel, which is always interesting to me. But in particular, it's a public-private partnership. P3s, PPP, they're all in vogue and have been for the last few years on a national basis. But they really we haven't seen many of them happen here. I don't like them as someone who has advised the public. Usually in P3s, PPPs, it's the private that wins out, that does better, just by nature for a whole bunch of reasons. So this is one that's getting done, and it's great because, and the reason that PPPs exist is because otherwise the hotel wouldn't get built, right? So the public is in essence, the public component of the PPP is subsidizing the private in essence, or subsidizing the project in order to get it built, right? And so that's the reason those happen. Anyway, another one is the Assaku, the famous old Assaku Inn, which got run into the ground, is being redeveloped. It's going to be closed this season. Tim Harrington's redeveloping it. He did the Claremont, which was, an Instagram hit, or whatever they call it, Instagram something, there's a name for that. Anyway, so Assaku will be exciting. Couple of projects. Dover Foxcroft is Libra Foundation. It's great to see them doing something to promote hospitality, and also they're not really leading with hospitality. They're leading with athletics, right? I mean, there's a big training facility up there for Nordic skiing and whatnot. And so, anyway, that's a good and interesting project. The Bridgeton Hotel I just thought was cool because they're finally, looks like they've got some traction, and I think it's a great project and will be really successful. Okay, so now we get into the trends and what you've all really come for and what we were supposed to talk about. And this is kind of the boring part, right? This is the new normal. Oh yeah, revenge travel was one of those other things that was fun to talk about. Revenge travel, bleisure. Anyway, it's over, right? COVID's over. Everyone's already been to Europe. No one gave up on room rates, right? So room rates are holding. That's really, to me, is the big news, is that operators, to see a decline in occupancy, usually it's followed by a decline in average rate, and we haven't seen that yet. So, and demand has softened. The big thing is on the expense side of the equation is labor, right? And that was another thing that was huge, right? You remember, it's like in 2022, places were shutting. Even though they were full, they were shutting because they didn't have any employees, right? So that has, I don't want to say it's really gone away. It's more, I don't know, I feel like operators are just used to it. It's still hairy, but they've either figured out how to adjust for it by lessening their offerings so that they need less employees, or they've just figured out how to make do, and or they've got it and they're doing what they can with the employees that they have. So for Maine, look, the bad news is demand's not growing like it did, but the good news is operating expenses aren't growing either. So again, this is kind of the boring part, right? Like, nothing's really dramatic is going to happen in the lodging industry this year, good or bad. So development trends, again, I'm blaming this on Shelley. I don't think she's here because this is not necessarily in the most ideal order. But look, development trends, construction costs and interest rates, nothing's getting built right now. I can't believe that anybody can get, either get a project to pencil given the current construction prices and interest rates. And that's really what it's about. It's not about demand or market performance yet. Fortunately, demand is going to continue to remain strong, and performance levels will remain strong and even grow in 2024. And so that will help the underlying economics of new development deals in the region and the state, but it needs a lot of help given the current construction. And I was glad to hear Pete say about how it sounds like construction costs might be starting to normalize a little bit. Let's cross our fingers. Okay, so main outlook. Look, I survey a bunch of operators, as I said, to get their sense of what they're seeing, and occupancy is going to be flat. Again, it's nothing dramatic, right? There's always winners and losers, and there will continue to be. There aren't any underlying fundamentals that are expected to impact demand. Average daily rate, moderate growth. Inflation is helping, and then also just the rates in other markets are helping as well. So, all in all, the end takeaway is, RevPAR growth of 2 to 4%, right? Like roughly in line with inflation. So revenues per available room will grow at 2.4%. And it's funny, we used to give this presentation in Boston, and we'd do it. It was timed with with budget season, right? And actually it moved up every year. And so all the operators would come, and we would put up, this is when I was with Pinnacle Advisory Group, we would put up this number like RevPAR in Boston and Cambridge is going to grow by, 3.2%. And 30% of the room would stand up and walk out. It was hilarious. Like, imagine if like half of you just saw that number and like, okay, good, and left. Anyway, that's what we used to, that's how it used to be in Boston, but there it was a little easier to track again because it was a smaller, more condensed and homogeneous market, I guess I'd say. So, anyway, I lied. Another pretty picture for you to leave you with. We've got about 11 minutes left. If you have any questions for Peter or Craig.
So just, you talked a lot about hotels and stuff like that. Do you have access to any statistics, or do you have any insights into the short-term rental market? As far as like you're talking about vacations and vacation, do you have any insight into like vacation rentals or such?
No.
Thank you very much.
So there is data out there, right? Airbnb, somebody, I don't think it's related to Airbnb, but AirDNA puts out statistics on short-term rental. And the problem is it's not technically statistically significant. It gives you some ideas in terms of what's happening in the short run, but the problem is the way they categorize supply. With hotels, we say, okay, you have 130 rooms. Well, and those rooms are open 365 days a year. With Airbnb, that's not the case, right? So it's really hard to judge how those how those properties are performing. And from a general perspective, I did have an interesting quote from a survey that Airbnb did, which they said that the intent to remain, to travel remains steady, but people are traveling not because they can, but because they want to experience new things, which I think bodes well for Maine. Again, the experiential travel and the authenticity of places like Maine, I think that's a positive. So anyway.
I want to thank Cassie, too. I forgot to mention her earlier.
I want to thank my mom.
Matt. Anybody else I forgot? I love you all. It's been a pleasure.
What time are you at Demoulas on Saturday morning?
Depends. My car was left there overnight on Friday, or I'm actually in on Saturdays oftentimes. It's actually amazing to see how many people, even the last few weekends I've been down there, they're floating around Portland at DeMillo's on Saturday morning. I've stayed upstairs overnight one time. No, my kids did. They were friends with one of the DeMillo's, and that was their tradition. Birthday parties were held at DeMillo's.
Any other questions?
Anybody else?
Well,
Any-
we'd like to thank you
any
for
other
coming to
damn
Pete's
questions?
Comedy Hour. He'll be
Hoover
performing
Dam?
this weekend. Any other questions? There's a lot of great information. It's your chance. There you go.
Question for Matt. You had the docent collection up there, and I'm curious what your take is on these micro hotels and sort of self-service hotels. Whether you think that the larger hotels will start to embrace that kind of technology and model.
It's a great question, and it is kind of one of the hottest things in lodging right now. It's part of the alternative lodging sort of movement, if you will. I love it because I love it as a consumer, and I love it as an investor and an advisor because it's simple, right? You have a lot less employees, and it's a lot easier to manage, especially with technology. And so everybody is in on it in different variations. There are all kinds of companies out there now that are doing it around the country, right? So there's Airbnb, which is like I put my condo on Airbnb, and then there are things like Docent's Collection and Sonder and Placemaker and a bunch of others where now there's even a strata, right? So Sonder is apartments. And they'll take a bunch of apartments in like 10 apartment units in a complex of 100 in Austin, Texas. And then they'll lease that, and then they'll sublease it. And then there's companies that will take a whole building, and then that's it. It's just all, it's basically a hotel without the services, right? There's one person who's around to answer your calls, but sometimes you call and you get, somebody at in Austin, Texas, I had to call, and I got somebody in New Jersey answering the phone. But it's super efficient from a profitability standpoint, and it gives consumers what they want because they get the space, right? So in my case, I like having extra space, and I like being in a neighborhood where real people live.
Elliot Barry with Camden National. I guess it's a question for Matt, but also Pete might be able to chime in. In terms of workforce, what do you hear from hotel owners about finding labor, especially seasonal labor, and same on the retail side, I guess?
You want to go first since I've been doing all the talking? How do you feel about labor? Issues with labor?
I'll figure out what the question was.
All right, so labor, the question was, what are you hearing about labor, and in particular seasonal labor? It continues to be an issue. Heavily seasonal markets like Maine require a lot of visas, right? Visa employees, whether it be HB2 or J1s are the most common types of visas that are used to get seasonal employee help. So we're really at the whims of the government, and you put in a request and you hope that you get it, and then when you don't, then you can be in real trouble. So Right now, I believe that the numbers are capped at the number of visas, and so now it's just a question of how you do in the lottery, which the first round was, I think, just a month or two ago, or earlier last month.
Yeah, I think on the retail side, it's still difficult for people to hire. I hear this firsthand from my wife, who runs a restaurant group, or helps run a restaurant group. I mean, keeping it staffed and up and running, it's difficult. And we're in Portland. We're lucky that things are open all the time. Rest of the state, I don't know how they do it, to open like for seasonally. But again, I know most of the retailers I deal with, if they're smaller, they're in the store themselves a lot of the times. They might have one other person, and this time of year. But the bigger nationals, some of the other ones, they like Madewell, there'll be 3 or 4 people in that store because of the demand. But again, it's difficult to hire. It's difficult to keep people in almost any industry right now, regardless of what it is. And I think if you take great care of your people and compensate them well, and I think Costco is a great example of that. I think they do a much better job of maintaining their employees. They pay better, they have better benefits than like a Walmart or Sam's Club. And I think, they really do seem to do a good job, from what I understand, of making sure their people represent their products well, which is a key in any industry, whether you're selling ice cream or selling automobiles or homes.
I heard I read an interesting anecdote, and I hadn't followed up on it yet, but there's a hotel group on the Cape, in Cape Cod, that bought an inn in Provincetown for $20 million, and they said in print at least that they intend to use it for employee housing, because they don't have it will help them and get their employees. So.
What are your thoughts on office space to retail and hospitality conversion in Portland? As a Portland resident, I walk around, I see big open office towers. Whether or not they're leased, I don't know, but it looks like there's a lot of opportunity there. And if you look at the chart, you've got like a 20% vacancy rate on office space and 3% on retail and hospitality.
I'm going to repeat the question and then make him answer it. So the question was, what are your thoughts on the conversion of office space to retail?
Well, I think it depends on where you are. I mean, if you go to the Back Bay of Boston, there's 2-level retailers. We have some of them here. The Rue Kitchen, Madewell, 2 levels, a couple other spaces. But it means you have to have a couple people on staff. I do think that conversion of some older buildings into apartments or short-term rentals or hotel rooms makes sense, and then it would only help the supply to fill the supply of the rest of the office. I mean, there's a bunch of things in New York where they've taken pieces of the middle of the building out so they can add rooms on the top floor, but the building has to work from a design standpoint to convert it. It has to have lots of light. At least you have to, my thought, would have to have some windows and some character. But I don't think we're far off in Portland from having more 2-story retail. And one thing I also think we're missing here, which I think will come, is entertainment. The 2 biggest beer seller and alcohol sellers in Portland are Barcadia and Bayside Bowl. So we have the food thing down, we have the bar thing down, we have the brew thing down. But find more things to do on a Saturday night or earlier after, is one of the key components for, because I'm in bed earlier than most, but young people want to go and see a small show. They want to see a comedy show. We don't have any comedy in Portland anymore. So I think one of the things that we're missing is entertainment in our market, really. And it's, my kids were home from college, they're like, Dad, it's boring here. I'm like, oh, yeah, I know it is. Yeah, but it's dark early. And I think that's another thing we could do with a second floor, have like a pool hall upstairs, a little bar downstairs, some food going on. And I think that will attract younger people to the downtown off hours. Is that it, Craig?
Perfect timing.
You told me the more I talk, the less you have to one year.
And that is true, but that does wrap this segment up. Thank you, guys. We're here for our guests.